Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is September 23rd, 2022. Hope you're having a great Friday wherever you are. And today I really want to re-examine our analysis on the DXY. If you're subscribed to the channel, you'll know that I do believe that the bear market is over, right? For all intents and purposes, the bear market's over. My investments in the past few days have just been going up and up and up, retracing somewhat, but the retracements are nowhere near where I first started, okay? I'm seeing 20, 30% gains in some of my assets. For me, the bear market is over. And all the while, Bitcoin's holding steady. It's not doing much, but it's holding steady, right? Some other assets are also kind of holding steady. So what I want to do today is, as an analyst, right? Not necessarily a fanboy or anything like that, but a pure analyst. I want to re-examine my assertion that the bear market is over. And as you know, I do put a lot of emphasis on this channel in the DXY's price action, because I believe that the DXY, the US dollar index, is the market mover, not just for cryptocurrency, Bitcoin in particular, but also for the traditional markets. And as these are inversely correlated, if the dollar index is not meeting resistance, is not going to find a way to reverse course, there's no way that we can have a bull market, okay? So this is why I really want to look at the DXY today. Obviously, we're going to have a look at Bitcoin. We're going to look at the SPX or S&P 500 as a proxy for the traditional markets. And maybe we're going to have a look at some altcoins as well. So if that sounds interesting to you, then stay tuned. All right, let's get into it, guys. All right, looking at the DXY, first and foremost, on the smaller time frames, all right, here's what I'm seeing. I'm seeing this move up, and I've got this Fibonacci retracement level pulled out, okay, and this is significant, okay, and I'm going to tell you why it's significant. For two reasons, okay. One reason is I've got an A wave here, or at least what I think is an A wave, or an initial break of structure, okay? I've got an A wave, whoops. I've got an A wave here, all right? So a three-wave move here, which I've taken the Fibonacci retracement of, and that gives me a phi ratio of 112.60 over here, okay? So that is important. So keep that in mind, 112.60. And why is it important? According to Elliott wave theory, on the balance of probability, given an A wave, okay, a three-wave move, the B wave, or the counter, what would you call it? It's a corrective wave and the counter-corrective wave. It's a counter-corrective wave, okay? It's a three-wave counter-corrective wave. So if this were A, this would be B, okay? This cannot extend beyond the phi ratio of this right here, okay? Just theoretically, right? That's what you see typically. So right now we're pretty much there. We've gotten wicking beyond this phi ratio, okay? Which actually, to be honest with you, is not even something that you see often. Usually these phi ratios for the B-wave retracements are pretty well respected. They're not always 100% respected. I have seen some wicking. So I'm not saying it never happens, but it doesn't happen often, okay? So I'm already on edge looking at that, okay? So that's this A wave. Now, even more importantly, right? Remember I said 112.60, okay? Just keep that in mind, 112.60. Now you want to zoom out. So this is on the hourly time frame. This is a small time frame. On the higher time frames, okay, remember what my analysis is. And again, this is all my analysis. So Doesn't mean it's gospel, doesn't mean I'm 100% correct, but based off of what I've done, the work I've done, this is it. This is the phi ratio, okay? This is our 14-year resistance up here, okay? And we've wicked beyond it. That's fine. Even if we were to continue, we would have to do something like this. There's no way you're breaching this, not retesting it before continuation if you were to continue, okay? But provided you reject off of this, it's okay to wick beyond that. So technically speaking, just looking at the long time frame or long-term resistance, wicking above it doesn't do anything. That's okay. And actually, if you go on the log scale, yeah, it's still the same. It's still the same. Okay. Just checking if that resistance line. So, because you should technically have the log scale on to really see where that resistance line is. But it's more or less the same log scale on or off on this time frame. Okay. The other thing I want to do is, so let me just show you this so you can see it. It's a lot more clear here. I'm going to turn on the line. I took off the line just, because you don't want a bunch of lines everywhere when you're doing your analysis. Now, this is the actual three-wave move that we anticipate that the DXY undergo. Okay? So we've been up for 5 waves, okay? And actually we've been up for, right, let me just zoom out a little more. Context for everybody, because I don't know who's watching. If you really look at the DXY, a high time frame, since 2008, you've been going up for 5 waves. You broke down here in 2016, okay? This was your initial break of structure. You initially said, essentially said that this 5-wave move was up and you were starting a correction, okay? And we all know, according to Elliott wave theory, whatever whatever period of time this takes, the correction should take approximately the same amount of time, okay? So just for some context, right? So, because again, according to Elliott wave theory, waves of the same degree are proportionate. I'm going to say proportionate, not equal, but proportionate in time and in price. Okay? So if you take the time it took to go up for 5 waves here, you'll see it was approximately 2,100 days. And if you do that again for your correction here, you'll see that thus far we've put in 2,086 days, 2,070 days, something like that. So we're pretty much, this is why I have this C wave rejection coming down so quickly. Okay? And so this is the context I love sharing with you guys. The high time frame reads. These are likely the most accurate reads of any technical analysis, because there's just little room. It's like you see these trends, and these trends have developed for years and years and years. It's easier to read. Okay, always start from high to low, always start from wide to narrow. So I'm looking at this and I'm thinking, okay, waves of the same degree are equal or proportionate in time and in price. Whatever happens here, we've been correcting for quite some time, right? You got my 3-wave move here. You've got my 1, 2, 3-wave move here, a massive B wave. And we're currently, according to my analysis, in this impulse of the B wave, okay? That's my analysis, okay? It doesn't make sense to me if anybody were to say, Dean, this is just a continuation of this wave right here, okay? Ooh, actually, I'm seeing something right now. I am seeing something right now. Guys, I'm seeing something right now. Here's another possibility. Here is another possibility. That all of this is wave 4. It's possible. It's very, very, very possible. All of that is wave 4. All of that can be wave 4. Okay, let's measure that possibility out. Okay, and again, I share my analysis with you guys as I do it, especially when I'm live. I don't hold anything back. I don't care if I'm right or wrong. I'm just sharing my analysis. This was what I would do if I were completely alone. I don't care who's watching. I have no, oh my God, I can't share this, whatever. This is, I love to do this, so I'm sharing it. It's very possible that this also, because, okay, we know wave 3 typically targets between the 1618 and the 2 Fibonacci extension. So that's the end of wave 3 for me. Highly likely that that's the case. But what's also possible is that you've got here I would say a double 3. W X Y. I like that. I really like that. I actually really, really like that. Okay? I really like that. I might like that more than my current count. So I would probably take this and put this wave 4 down here. Given that this would no longer be wave 5 of, okay, so let's just remove this for now. That being said, this would no longer be wave 5 of our, B wave. This would be our actual wave 5, okay? And so what we could do, that being said, let's just move this here. Okay. Let's see. I'm going to move this now. And let's say that we're indeed, let's turn the log on. Okay, let's turn the log on. We want to be accurate. Okay, let's say that this is indeed our wave 5. Let's measure our wave 5 projection given this new count, which would be wave 3, retracement of wave 4, so the low of wave 4. So you could say that wave 5 should have ended technically at around 102, okay? And given you a concerted wave 5, just given, so basically all I did was I took wave 3, the length of wave 3, retracement of wave 4 to get my wave 5 target. Okay, that's one way to do it. The other way to do it is to take this fib retracement tool and take the inverse, the inverse 1618. Okay, so the inverse, two ways to get wave 5 targets. One is taking the length of wave 3, retracement of wave 4, targeting the 0618. Okay, balance of probability. It doesn't always have to hit there. That's one way. The second way is you take the inverse 1618 Fibonacci retracement of wave 4, which I did here. So you took the top, I took the orthodox high of wave 4 and the low. And that gives me 108, okay? But I'm currently at 112, okay? So I've gone beyond that. And again, these are approximations, right? So I think even still, even with this different count, this is it. This should be it, given our Fibonacci retracement targets, okay? And these are probabilistic targets, obviously. And our larger 14-year resistance, okay? So I'm still of the belief that the DXY is closer to finished than not, okay? And actually, if you look, so now I love this. I love this. And this, guys, if I wasn't me, I would subscribe to this channel just because whether I make mistakes or not, I share everything with you. I have nothing that I'm like, oh, I'm gonna sort of try to make myself look best. And you know, I've said this before. One of the reasons I do these live streams is because it brings something else out of me. It's like I'm channeling, or I'm like in another. I'm not even thinking sometimes. I'm just. It's kind of like automatic analysis, and then I'm listening as well. And sometimes I listen over. I'm like, whoa, I never thought of that, right? Like this idea for this alternate count, I didn't see that until I got in front of you all and did it. And that's why I do this, because I benefit from it. So quite literally, if no one was watching, I would still do this, because for some way, somehow, it's kind of like me journaling. It's like my public trading journal. And this, for some reason, I don't know why, brings ideas out that I didn't have otherwise. Okay? So I love it. Anyway, I still like us being at resistance, major resistance for the DXY, and here's why. Okay, let's jump down in a smaller time frame and let's focus on this right here. Okay. Oh, actually, before I delete that, if we keep this count right here, this 5-wave count, okay, 1, 2, 3, 4, and then extended wave 5, you can still see that extended wave 5 ended exactly where we thought it should end, based off of our inverse wave 4 Fibonacci retracement target, right? This is exactly where you got rejection at the 1618, at the inverse 1618 of wave 4, at the 14-year resistance. So that to me, this to me is your A wave, and this is your B wave, okay? And so I do expect a move down from here, okay? Now, what's really interesting about this new kind of count, this gives me new perspective. Here's what I'm seeing. Here, let's put this in. And I don't need this right here. If I can get rid of extra lines, I'd rather. To me, I'm really paying attention to this right here. Okay? This move right here. Okay, and I think it's actually going to come down here. Because typically in an extension, wave, the initial break of structure targets wave 2 of the extension. Let's check that. Okay, and before I check that, let me just check the chat. G-Tekken says, great work, especially going live and investigating possible solutions. Yeah, thank you, G-Tekken. Appreciate it. Let's check that. I believe that's the case. I'm just going to check the wave manual. Oh, crap. I'm just going to sign in. Nobody hack my account, okay? Okay. I want the Prector. I believe, I really do believe it's wave 2 extensions. It's, if I recall, it was towards the end of the, he mentioned in the beginning and then towards the end of the book. Let's see. Extensions. It was in his observations, I remember this being. And I do this from time to time, guys. Like, a lot of these rules and guidelines I have committed to memory, but sometimes for, like, obscure things, I have to double check. And this, of course, is, the seminal work by Bob Prector and A.J. Frost, 11th edition. Key to Market Behavior, Elliott Wave Principle. Let's see. I believe it is. I know where this is. I could see the page in my head. It is. It's in extensions. Maybe it's around throw over. It's like, and then he's so excited when he talks about it. Yeah, so this is essentially what I think we're looking at. Something like this, right? A throw over where you're wicking above this long held resistance that the impulse is channeled in. Okay, that's not why I came here. Okay, but that's just a parenthetical. Um, where is this? Okay, A waves. If I don't find it in a few minutes, I'm just going to let it go. I'm pretty sure I'm correct, and it's not that important, to be honest. I just kind of want to check for myself. Um, um, I think it's in here somewhere. No. I'm sorry, this is not great TV, but I'm just trying to find this. And again, if I don't find it, it's okay. I'll look at it on my own time. Anyway, yeah, it's not important. I do believe, I don't know where it is. It's because you know how Prechter writes. Like, he writes kind of like stream of consciousness sometimes. So you're like, what are you talking about? And he's like, oh, by the way, after you write 11, after you write 11 editions of something, like, you don't care about like indexing everything in the proper space. You're just like writing. Okay, so I want to look at this as a three-wave move, but it is possible. Now, let's say this is the end of the fifth wave. It doesn't look good, and I'll tell you why. This doesn't look good for the end of the fifth wave right here, because we're already way past even the midline of this 1618 to 2 Fibonacci retracement. Okay, this can't be it. I understand that it's possible to wick beyond the phi ratio, but if this was correct, this count was correct, the phi ratio would be respected a lot more than this. I've never seen the phi ratio be disrespected like this and actually the count be correct. Okay, so what I'm going to do here is the chart or the market has shown me that this is not correct, and that wave 5 of this impulse is not yet finished. Okay, and so what we may be looking at here is, if we want to count something, and I'm going to count. Okay, so I think this is correct right here. This primary wave, this primary count, I like this count. I like this count for a few reasons. I think this is what needs to be recounted. Okay, so I'm gonna recount this with you guys, and I'm gonna do this. This is gonna be the intermediate count. Okay, intermediate wave. Now, I think it's also important to note that in all of this, so DXY is not finished. It's still trying to find the end of wave 5. In all of this, Bitcoin's holding steady. The rest of the cryptocurrency market is holding steady, and it's not puking. That is very, very important. Okay? Because if the count were completely off and we were going to rip to like 150 or something like that, then it's highly likely that you would have already seen us make significantly lower lows and completely break market structure. I think that's very important to note. Okay? Now, let's just go back to the DXY because we're not finished with that yet, right? But, given what's happened in the market recently, I think this count needs to be changed, and we're going to try and count the intermediate wave. I think I'm already in intermediate, but I think that's 1, 2. I count a full wave here. That's 3. That's 1618, or 161.8% of that wave 1. Approximately, so that's good. That's wave 4, and I think what you're getting here is an ending diagonal wave 5, which are typically tricky. So this may be 1, 2, 3, 4. I'd say 5 ends around here somewhere. Okay. Because, to be honest with you, if this is 1, 2, 3, and this should be intermediate degree, I know this is, yeah, perfect. I know this is getting really into the weeds, but, like, if you're going to do Elliott wave theory, I think you should try and do it well, okay? Obviously you can just, like, not, but, what's the point then? What's the point of doing this and relying on it and putting money on these analyses if you're not really going to try and get super specific as best as you can? So I do think this is 1, 2, 3, 4, and this is another extension. Okay, so you have extensions within extensions within extensions. I think you have an extended fifth wave and then an extended fifth wave of that fifth wave extension. Yeah. So I'd say it's something like that. I feel like this is 1, 2, 3, 4, or is this even? Trying to see. Okay. Yeah, if this is an ending diagonal, another thing that we can expect is what you see in ending diagonals. Okay, so there's 2 types of ending diagonals. There's 2 types of diagonals, as you guys know. There's converging and diverging diagonals, okay? Which means you can have ending diagonals that are conically shaped and then ending diagonals that are wedge shaped, okay? Looks like we're preparing for a conical shape diagonal right here. Okay, what I'm going to do is I'm going to make this 0 opacity again, just not to confuse us. And I think that this fifth wave may find some resistance here, okay, at around 114. Give us a rejection back on top of this right here, this 14-year resistance, and then finally put in that fifth wave of our ending diagonal, our diverging ending diagonal up somewhere here, but close to 117. Okay, that's my best sort of read on the DXY right now. Okay, so I do think, for what it's worth, we do get some rejection, which will give stocks and crypto some relief, right, momentarily. before another run up. But what's important is not that it goes down to zero right now, but that it eventually goes down to give stocks and crypto the ability to move up, to begin moving up. And even when they start moving up, nothing goes in a straight line, so they will have to go up and retrace, and then go up and retrace, and go up and retrace. So this is my recount of the DXY based off of the latest information. I think this is a diverging ending diagonal, so it's something like this. I'm going to change the degree again. And for those of you who don't know what I'm talking about, degrees and stuff like that, it's kind of advanced stuff. But essentially what I'm doing is I'm just using the idea that Elliott waves are fractal in nature, like they're like Russian dolls. So within one Elliott wave, you can zoom in and break it down, and you can see another degree, a smaller degree. And then you can do that ad infinitum till you see an even smaller degree. You see, we did the primary degree, intermediate degree. Now I'm going to switch this to a minor degree because I'm counting minor degrees within this primary wave. There's 1, 2, 3, 4, 5. Now I'm focusing on the primary wave, which I'm going to actually make visible just so you can see what I think should look like. Something like this. I don't know. Something like that. Okay. Something like that. So maybe 122, something like that. But I do see a rejection for wave 4 of the minor degree coming up very soon. Okay. Nothing goes up forever, but I think what you're getting here is, okay, so what is an ending diagonal? And this, you can go into, Elliott waves made simple. You can go into, I'd say if you're beginning, use a simple text like Elliott waves made simple, like by Steve Sinclair. Goes over all of this stuff. Just really quickly, I'm going to show you diagonals. Okay, so there's ending diagonals. There are 3, 3, 3, 3, 3 structure. Okay, so you see leading diagonals are 5, 3, 5, 3, 5. Ending diagonals are 3, 3, 3, 3, 3. And you'll see Steve Sinclair shows you. He actually shows you the converging ending diagonal, but there's also such a thing as a diverging ending diagonal. Okay, so Elliott waves made simple is more for beginners to intermediate, but if you look at the wave theory by Prechter and Frost, you'll see very clearly there are two types of ending diagonals, the converging and the diverging, and I think he's drawing the converging one because that may be the more common one, but in my experience, I've seen both. I've seen both in crypto. So here you're going to see 3, 3, 3, 3, 3. So this is what we're seeing. 1, 2, 3, 1, 2, 3. 1, 2, 3, 1, 2, 3. 1, 2, 3. This is what I'm seeing, okay? So that's my new sort of focus on, or not my focus. That's my new count, or that's my new read on the DXY, okay? But I still think we're at resistance for all intents and purposes. I still believe that, we're at the place where, we're very, very close to getting a rejection. But I do see a little more upside. I don't know until when, okay? This time may be off. We may be there already. I may have miscounted. But, yeah, that's what I'm seeing. I'm seeing some sort of progression a little more before we reject and really create one of the biggest bull markets. So, okay, back to the title of this whole stream. And it's a little bit sensationalist, but it's also not, okay? And this was obviously given my previous count of this DXY. But hear me out. Given that we've been in some sort of impulse for the past, 11 years, okay, your initial break of structure is going to come down to wave 4 of the previous trend, okay? So this should be the biggest bull market in crypto history, okay? I don't know about traditional stocks. Traditional stocks are most likely in a B wave, okay? We're going to look at the SPX in a second. But for crypto, given that if this count is correct, okay, wave 4, this, and I like this count better than the previous count. Wave 2 is relatively simple. Wave 4 is relatively complex, okay? You have relatively sharp, relatively flat. So you have, by the guideline of alternation, balanced wave 2 and wave 4 corrections. You have a nice W, X, Y, right? A 3-wave move, right? Boom, boom, boom. Nice W, X, Y. Nice ABC. ABC in 2, W, X, Y in 4. Simple, complex. And then you have a parabolic run to the upside in wave 5, which is a bit beyond your 14-year resistance, but not too much over, okay? And that's what we just saw in the Prechter and Frost manual, the overthrow, okay? If you channel your wave counts, you'll see that sometimes you come over, like here, 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 you wick above. That's your overthrow. So maybe I'm exaggerating this right here. Maybe the count's a little off. And yeah, I really don't see it being that extended. Let me just fix that. Let me fix that. Let me see. I must have made some sort of error. Let me see if this is a legit 2. I don't think so. I think this is corrective. Yeah, corrective for sure. That's definitely 1, 2, 3, 4. Ooh, okay, I see. This is better. Because, okay, honestly, if this count were correct that I put up on the screen, we would literally be going until next year. This DXY would keep going until next year. We'd get a small declension, small turn down, down until the end of November. Because a lot of times in these ending diagonals and leading diagonals, you do see symmetry, the pattern, the market structure hold up. The symmetry is it's shockingly regular. So I wouldn't be surprised if it did take us to next year, but I don't see that happening. Let me just look in comments real quick. Steve says, so this might also be possible. Your counts for crypto market will be incorrect too. It's always possible. Steve, you always say that. We've been together for years. Everything's possible. We're talking about probabilities. Nothing's ever 100%. Steve says, since your crypto market counts are all based on DXY, no, they're not. Steve, I corroborate. I base my crypto market counts on the crypto market. I base my DXY counts on the DXY. I corroborate. It's kind of like using different pieces of information and bringing them together and saying, this must be the story, this must be the thesis. Nicholas says, hey man, been a bit, just stopping in, my 2 cents, more pain coming, but of course it's to be determined. Of course. All right, let's go back. What's up, Nicholas, by the way? What's up, Steve? All right, so I think that this is actually this is like this. Okay, let's take this down. Let's put that there for now. Okay. I think this is more realistic right here. Right here. This is top of 3. Bottom of 4. Okay, and we're going to look at crypto and the traditional markets in just a second, okay? Again, just like I said to Steve, it's very likely... Ooh, let's see. What is this? Okay, that's likely right here. That's very likely right there. That makes a lot more sense. Both of these would be in the same spot right there. Something like that. I guess all of them. See, all the degrees end at the same spot, right? So yeah, we're gonna look at the crypto markets independently, as well as obviously in your mind when you're formulating a thesis, you're always biased in some way and looking because you have an idea like, okay, that's a possibility, so you see those possibilities. You understand what I'm saying? I'm not saying that I'm an unbiased machine. That's not what I'm saying to Steve. It's just that, like, I'm putting tons of money in these reads, right? I'm making a bet, an educated bet, a probabilistic bet, right? But I'm trying to be as unbiased as possible for my own benefit. Do you understand? Because the more unbiased my analysis, the more likelihood I have for my analysis to be accurate. Because I'm looking at this element and that element and that element independent of one another, and then I take whatever they tell me and I bring it together. But everything I've looked at, the DXYs told me that it was topping out or is topping out. The SPX showed me that it's bottomed out. The crypto market's shown me that it's bottomed out. So my thesis is bullish. It still is. This really doesn't change it much. But obviously the count has changed. So yeah, this would be up here. But yeah, you guys get it. All of the different degrees, the minor, intermediate, and cycle degree would end at the same spot. That's why you see all these fives of varying degrees up here, okay? So yeah, I do see this as 1, 2, 3, 4, and I think this is it. 1, 2, 3. You see that? You see that? Okay, I like this. I like this a lot right there. Do you see that? So it's an ending diagonal. We're looking for three wave moves, and this so everybody knows, like, this isn't the easiest thing. Like, I started, I wasn't reading ending diagonals until like much later after I started learning, Elliott wave theory. This is not something everybody sees. Okay, 1, 2, 3 waves. 1, 2, 3 waves. Let's see. I like the 3 waves here, and the 3 waves here for wave 3 let's measure it really quickly. I believe it's about 1/618 of wave 1. Let's just measure it and see. Because even in these diagonals, you do get that proportion that you expect. 1, 2, 3, 6. Okay. 1, 2, 3, 6. That's possible as well. I think this is likely. 1, 2, 3. 1, 2, 3. Somewhere. There's 3 waves in here somewhere. 1, 2, 3. Wave 4 is relatively complex. Wave 2 is relatively simple. Okay. And I think this is it. I think this is wave 5 right here. 1, 2, 3. Okay? These ending diagonals have thrown people off for ages. It's thrown me off for ages. They read like they're challenging to read, right? Because everybody's expecting something like this, right? Very few people know to even look for something like this, or something like something like this, right? If it's a diverging ending diagonal, obviously the proportions are off, but I see 1, 2, 3, 4, 5. I can see a rejection, a counter, pivot, and a move down. That's my count. Okay? And again, I don't get money off of YouTube. Like, Guys, I don't care about YouTube money. Even if I were getting YouTube money, that's not money. That's nothing I can do anything with based off of what I need. You know what I mean? Um, if you're watching, good for you. If you're not watching, cool, good luck. I don't care to draw people in or not. This is, like I told you in the beginning, I do this mainly because I enjoy doing it. And it gives me benefits, so I continue to do it. Yeah. Um, so yeah, I think this is more accurate, okay? I would say this is more accurate. And so this is my count right now, and I am waiting for a rejection for this final wave right here, which would give us a rejection in 3 waves down to about 111, back to 111, 110, okay? And then a move back up, and then a final move back up. So, okay, that's what I'm seeing. All right, now, let's go on. So that's the SPX, that's the DXY in about as much detail as I can give, all right? Now let's have a quick look at, we're running out of time. Yeah, we're running out of time. So yeah, let's get it going. So, the DXY has been pumping to Valhalla, or so it seems. It hasn't been pumping that hard. Obviously, the past week has been, a huge week for the DXY. But that being said, we have held market structure in the SPX, okay? And again, your SPX, your S&P 500 analog for traditional markets, you have 3 waves down, right? Your correction. Since then, you've put in an A wave, initial break of structure. Let's see. Yeah, I'd say this is your initial break of structure because this is wave 4 of the previous trend. So that's your A wave. Okay. And then your B wave looks like this right here. It's held market structure. Nothing has drastically changed. And what you could expect from this is another one of these, right? Obviously, we never know the size of the second degree AB base, but it looks like you need a second degree AB base in the traditional markets. So here's what I'm going to say. Based off of what I'm seeing in the DXY, based off of what I'm seeing in the SPX, don't expect the SPX to move to the upside drastically anytime soon. Do expect more ranging in this region for the traditional markets, as more specifically the SPY. For this reason in particular, you've only put in what I'm seeing as 1 degree of AB basing. That's a big A, that's a big B. You need another A wave, okay? It could be like this, it could be like this, who knows, right? 3 wave move to the upside, another 3 wave move to the downside before moving up. And this actually makes ton of sense, okay? My overall bullish thesis, given what the DXY is doing, given or about to do, or doing, you could say, given what the DXY is doing, or sorry, the SPX is doing, or crypto is doing, in this time, crypto is going to start going. But the DXY, or the SPX is going to sort of be ranging, okay? Because they're a different market, they're in different market phases. If you look at the SPX, it's likely that it's in a corrective phase. So the move up would be a corrective move up. Does that make sense? You've put in 1 phase of your corrective wave, okay? And this is all based off of really simple analysis, high probability, simple analysis. The higher the probability, the simpler, the higher the probability, I believe, okay? If you measure the time it took to go up here, okay, for this wave, whatever degree you think this wave is. Okay, and just do this with me really quickly, if you will indulge me for just a moment. It took you about 654 days to put that in, okay? So whatever this is, it doesn't matter the degree, primary, minor, intermediate, whatever, okay? It doesn't matter. You put in a wave after a significant retracement. You put in a wave, an impulsive wave to the upside, okay? What you get after that is you need a commensurate retracement. You need a retracement that is of the same degree as that impulse, as that move up. And, basic Elliott wave theory. Waves of the same degree are equal or proportional in time and in price. So, if this is 654 days, all of this should be more or less a proportion of that. So either 600 days or sometimes maybe a 2x, 1200 days, something like that. But there's no way, very improbable, again, always probabilities, very improbable, that your correction is complete after 132 days and you could just keep going up for, to wherever. You're more than likely going to have to put in, like I said, 600 or so days before making your way back up. And lastly, if you look at the SPX, you can see that there is strong resistance here. Let's just zoom out on the monthly real quick. And you can see that this dotted line represents a 12-year trend, okay, that you've bumped your head up against many a time. Once, twice, 3 times, 4 times. I don't expect you to break it, because if you broke it, you would have to first break, retest, then go through. It's unlikely that you're going to break it on a corrective move. So it's likely that your corrective move actually is going to come up to this point right here before retracing. Do you see how I put that together? Again, to the Steves of the world, I'm not like, ooh, the DXY is doing this, so, SPX must be doing this. I look at them independently, right? It's not that difficult. This makes sense. At least it makes sense to me. Get 3 waves down, get 3 waves up, you get 3 waves back down. That's your flat correction. You finish a flat correction, then you continue on your way. Then you can talk about breaking this resistance, yeah? But not until you put that in. So what I'm saying on the smaller time frames is that if you consider what's going on, it's very likely that you're holding these levels, and you're not holding these levels if the DXY continues to go up. Do you understand? The DXY must comply, because this is the underlying asset, this is the market mover. But it's just looking at this chart, it looks like what you're putting in is 2 degrees of AB basing, and you're going to do something like this before continuing to go up. So the DXY, while it's doing its little thing, up and down, kind of rejecting off of, whatever resistance, and then turning around, pivoting to be rejected, then you go up. But in this time, I expect crypto to just go, to get started, to get a head start, because crypto is going to be in impulse. Crypto, not like the SPX, is not in double negative. Okay, crypto is not in correction like the SPX is. Crypto is in pure impulse. Do expect some moves up, do expect some consolidation for the SPX for that reason, but we're going to look at crypto in a second. Don't expect that from crypto, and I'm going to show you why. There's one more thing I wanted to say here. I wanted to address the idea that this may be the biggest bull market in crypto history, and to do that, I have to look at the DXY one more time. Okay. It is possible that this may be the biggest bull market in crypto history, and here's why. I may have touched on this. Maybe I thought of it and I didn't say it. I don't remember. Okay. But here's why. What did I just delete? Oh, okay. I deleted the right thing. I don't want all of those here. Guys, if you're getting value, please like, share, and subscribe. All right. One of the reasons I'm saying, and, without sort of trying to get too dramatic or, doing clickbait stuff, that this may be the biggest bull market in crypto history is because up until since 2011, we've been in impulse, and this would represent the first break of structure. Okay, obviously, you've gotten intra-wave corrections, right? This would represent a crypto bull market between 2012 and 2014. Okay, this wave 4 correction would represent, at least these periods of the wave 4 correction would represent some small crypto bull market and a bull market in equities. But you've never ever gotten this kind of move. Do you understand why this would make this in crypto the largest bull market, right? Not in the SPX. Unfortunately, they won't have the benefit of taking advantage of this, but they don't need it because the traditional markets have been going up blindly for decades, okay? But I think that this rejection, this initial break of structure right here that we can expect at this point will represent, this first A wave will represent the biggest the biggest bull market in crypto history. And crypto is not that old, it's like 10 to 12 years old, yeah? Then this is going to go up, right, in 3 waves or something like that. And then the final correction is going to be that coming in 2026, 2027, 2028, whenever the hell. That's going to be the biggest bull market that we'd ever had. But this is going to be the first. This is going to be the biggest bull market that we've had to date or ever in crypto. And then the C leg, let's say this is a regular flat correction. This is going to be the biggest bull market in crypto history. I don't know what this is going to be. This is going to be a bear market, bull market, or this is going to be a kind of a corrective run up and like a corrective move down. It's just going to be a lot of chop, right? But this is definitely going to be the biggest bull market in crypto history around 2026, 2027. Okay, I just wanted to say that because I thought of that this morning. I'm like, would it? And I wanted to look at the DXY. And so, yeah, that's why. Now, finally, let's look at Bitcoin. And I don't think I need to do that. Just need to change screens. Okay. So, let me check the comments really quick. I don't want to ignore anybody. If anybody has anything to say. Okay. Yeah, Steve says, okay. All right, let's get on with it because we're almost out of time. Okay, guys. Now let's go look at crypto again. And, the whole thesis of this channel is using Bitcoin as a proxy for the cryptocurrency market at large. Okay. I said yesterday that you probably do want to look at altcoins and not Bitcoin if you want to be on the bleeding edge. If you really want to get ahead and you want to front run the move, you're not going to see Bitcoin as a first mover because this is alt season. Because if you have a look at Bitcoin dominance, you can prove it to yourself that Bitcoin is not going to be the biggest mover here. Okay, Bitcoin dominance is also telling us a story, and I didn't add this to the the data points that I was mentioning when I was talking to Steve or responding to Steve, but this would be another data point. Okay, how do you explain this? And this is how I do my analysis, right? I'm not just using one thing. I'm using a lot of different charts that may be related, but independently of one another. And I'm formulating a thesis, okay? I have this price action right here on the DX or on the Bitcoin dominance chart. It's been going up and down, up and down, up and down, up and down. Okay? So whatever is happening here, it's just been consolidating for a couple of years, okay? Now, what's more important is if I zoom out and I get some context, I see that this is a massive head and shoulders pattern. Okay, a massive one that we formed since 2018. So it's a 4-year head and shoulders pattern. Okay, we put in the left shoulder, the head, and the right shoulder. It's a little sloppy. You can also see a 5-wave move here if you look closely. You can see 1, 2, 3, 4, 5. Do you see that? Simple wave 2, complex wave 4, law of, or guideline of alternation respected. If you want to measure your wave 1 vis-a-vis your wave 3, you're going to see your 1618 to 2 Fibonacci extension hit. Everything works out, okay? It's highly probable, again, in answer to Steve, there's no crystal ball. Nobody knows for sure. At least I don't know for sure. I'm going to speak for myself. I'm 98% certain that this is coming down, okay? And it's going to come down sooner than later. Look at it. This Bitcoin dominance chart is essentially how you have to understand what it means, okay? It's not just a chart, but what it means. Basically, you're taking all of the activity in the entire cryptocurrency market and you're charting it against Bitcoin. So all the other assets, okay? When it goes down, Bitcoin dominance goes down. That means that everything's going down, but it means one of two things. Either everything is going down, but Bitcoin's going down more than the other things, or it means everything's going up, or Bitcoin's standing still, but those other things in the cryptocurrency market are going up more than Bitcoin. So Bitcoin's losing value. That's what this means. Dominance dropping means Bitcoin is losing value against those things. This chart is one of my data points, and it's telling me Bitcoin is about to lose a lot of value against pretty much the rest of the cryptocurrency market, okay? If we had more pain coming, as Nicholas posits, then how do you explain this chart? How do you explain what literally seems, what's the word? It looks like we're on the precipice, or we're right on the brink of a collapse of this move. And if you really, really want to get into the weeds, go on smaller time frames, and you can probably read a 333 or 333 complex correction right in this right shoulder. You can see that it's about to break, right? You can read, some breaking, okay? And it's targeting 23.9%. And I put this in ages ago, guys. But everything says that Bitcoin's about to lose a lot of value against everything. Would it make sense for us to dump in Bitcoin and this chart still be correct? It doesn't make any sense, guys, because we know when Bitcoin dumps, what happens? Altcoins dump harder. Do you understand? So if Bitcoin were to lose, let's go back to Bitcoin now. If Bitcoin were to lose this level right here, do you not think that our altcoins would fare even worse? I think they would, quite naturally, right? Altcoins would naturally bleed against Bitcoin, as they tend to do on the way down. But what's interesting is altcoins on the way up, they gain against Bitcoin. So basically what that dominance chart, which is another data point, is telling us that altcoins are about to gain against Bitcoin in a significant way. And the only way that can happen is if altcoins go up and everything starts to go up, but Bitcoin goes up just so marginally. Okay, now I said that the SPX looks like it's probably going to stagnate, or the chart says it's probably going to consolidate for a little more. But at the same time as the DXY is pivoting down, I do expect Bitcoin and alts to go, okay? Especially alts, all right? And here's why. Now, let's just look. Let's forget about these other charts, these other data points, okay? Let's answer Steve's question. We're just looking at Bitcoin. We've already seen, built the case as to why this double zigzag right here, it's two zigzags in one, okay? And if you put it all together, you get a WXY. And if you measure W, retracement of X and then measure Y, you can see that you've hit key Fibonacci levels, all that stuff. Okay, prove it to yourself if you don't know what I'm talking about, or just go look at some other live streams where I talk about this. I'm not going to repeat myself. And you can also measure this A, B retracement, and then measure this. This hit key Fibonacci levels. Repeat this for any other asset that you want. You can see that key Fibonacci levels have been hit. Okay, and you can see that in the past 100 days or so, you've put in some nice retrace or some nice A/B basing. You've put in some nice reversal patterns. Okay, and you're basically at support. Okay, there's nothing bearish about support. Right here, you're at support. Okay, so what do you do when you're at support? You buy. Okay, because it's probable that you go up. What's bearish is you break support, retest it, and then you dump. Okay, that's bearish, but there's nothing bearish about holding support. Okay, so that's just the technicals out of the way. It's likely that Bitcoin and alts continue to go up from here. Now, this is the weekly time frame, mind you. I'm not talking about small time frame analysis. Okay, same thing here in Cardano. You know, just look at it. Don't take anybody's word for it. Look for yourself. Prove it to yourself. This is support. You can do the same thing. You can measure this A wave, B wave, C wave. Measure it and see that you've hit key Fibonacci extension levels with the C wave, okay? And now you've been in a 130-day consolidation reversal pattern that's at support. There's nothing bearish about being at support. Guys, I can go on. Pick an altcoin, okay? You can see the same things. Measure this A wave, measure this B wave, measure this C wave extension. You'll hit key Fibonacci levels. I'm not even going to bore you with what those are. May 12th, you hit your orthodox low, and you've kept this range for 130 days. You're at support. There's nothing bearish about being at support. Okay, you've gone up marginally from the lows. Okay, but some assets like reserve rights have gone up substantially from the lows. Okay, same thing. Initial break of structure, your A wave, your B wave, 3 waves. Measure your A wave. Here, let's just do it with reserve rights. I'm just going to do one for you guys, okay? Let's just do one, because I've done this a bunch of times. I'm not trying to patronize you or anything. I've just done it a bunch of times. And if you follow this work, you know exactly what I'm talking about. And I'm not going to try to bore you with the same old analysis. But that's A wave. It's a 3-wave move. Okay, we're taking the orthodox low, not the nominal low, but when you're doing your measurements, you want to take the orthodox low, okay? And a 3-wave move up, you take the orthodox high, okay, which also happens to be your nominal high. This is your pivot, and this is your 5-wave move down. Where did you hit key Fibonacci extensions, guys? This is why we do the analysis, right? And not everybody can do this, but like, you know, you trust the math, and the math says that, you know, typical 5-wave C-wave extension out of a 3-wave move, you want to target 1-2-1-2-3-6. In an extension, you target 1-6-1-8. 1-6-1-8 is hit right here. Wicked. And what did you do? You wicked up, and then you created a 130-day consolidation reversal pattern, and you were just a few days ago at the base of said pattern, okay? And reserve rights just so happened to move up from there. And, you know, this is one of my positions, and it's green as fuck, okay? And I have other positions that are also very green. So, I mean, guys, keep calling for bear markets. If you think you're still in the bear market, by all means, keep selling. But I'm going to keep making money because just accumulating these bottoms, I mean, already, that was crazy. And, I mean, this we still haven't even broken the 130-day range. Imagine when it breaks that range. I mean, guys, there's nothing bearish about being at support. That's all I'm saying. There's nothing bearish about being at support. So, as crypto shows the strength, okay, despite what the DXY is doing, I know it's threatening, but it's not bullish. There's nothing bullish about it. It's just going up marginally. It's kind of dying slowly, okay? But again, prove it to yourselves. You got these moves, these big moves. This is a double zigzag once again. This is a double zigzag again. No, this is just a, no, this is a regular zigzag. See, this was not an easy thing to read. Okay, you can see 3 waves, 1, 2, 3 here, 1, 2, 3 here, and then 1, 2, 3, 4, 5 there. Okay, that's not easy to read. That's not easy to read. A lot of people can't read that still after it's formed. They can't read it. But yeah, I'm not gonna say it's easy to read. Anyway, synthetics holding support. Nothing bearish about holding support. This is my bullish case. The fact that we're still holding support, the DXY has been pretty much threatening to go higher and, moving higher ever so slightly. And at the same time, crypto's been like, yeah, and Bitcoin's been like, yeah, and Bitcoin's not even the bullish asset, and it's still holding support, and it's been holding support. If an asset, Dogecoin, that's another one of my big ones. Look at this. All right. So I'm going to do this one last, and then I'm going to head out because I got to pick my son up. 3-wave move down, 3-wave move up, 5-wave move down. That's a zigzag, okay? That's an A, B, C. A is 3 waves, B is 3 waves, C is 5 waves, okay? That's the completion. That's what you're looking for. So to answer Steve's question, when I'm doing my analysis, I'm looking at all of this on a high time frame, independent of everything. I try to take everything out of my head. I'm looking at this, and I'm like, okay, what the hell is going on here? Okay? So I look, and I see a completed corrective wave, okay? I obviously see 5 waves up here. Any idiot can see that. And I see 3 waves down. 5 waves up, 3 waves down. Ooh, I love that, because that tells me whatever happens here is consolidation reversal for continuation of this trend, okay? Which would take Dogecoin to, 50 some odd bucks or something, I forget. So for Dogecoin, this is obviously your consolidation reversal pattern. You have your orthodox low on May 12th, right? Let's jump into the daily time frame just to prove it to yourself. And again, this is going to be my last one. I got to go pick my son up. And what you see here in Dogecoin is what you've seen in most altcoins. Your 2 degrees of AB basing. Your big A, your big B, your small a, your small b, okay? And small a and small b just refer to the second degree, okay? It doesn't necessarily mean that the second degree of A waves has to be smaller than the first. I think you guys understand that, okay? And then you have a little pivot here. And what's really interesting about this pivot is it presents as a descending wedge, a falling wedge, which is a bullish pattern. And look what the fuck happened since yesterday. What's bearish about that, guys? The DXY is going up, and crypto's like, I don't care. If you guys want to sell, by all means. But if our analysis on the DXY is correct, it's either at resistance and about to pivot and reverse, or there's no correlation and crypto's basically just ignoring the DXY. Do you understand? Like, the DXY can't be that bullish if there's certain crypto assets that are, as we'll all concede, are linked very, very strongly to Bitcoin, but are going up. And it's not just one, it's many. It's many, okay? Obviously, you see some red here, but trust me, if you jump down into smaller time frames, you'll see that we've been pushing up for, past 2 days. Okay, not a ton, but we've been pushing up. We've been kind of testing resistances to the upside. So this is again my entire bullish thesis, looking at various data points. Okay, this is why looking at Bitcoin dominance, looking at altcoins, looking at Bitcoin, looking at the DXY, looking at the SPX, I'm still bullish, and my positions are doing well. Okay, I'm up in my positions, and I don't plan on buying any more and trading any more for 6 to 8 months. Okay, like right now, I'm just looking at my positions. There's a lot of green. Some of them are underwater because I accumulated a little too early. but there's a lot of green. And a lot of these are leveraged positions. So they're not just like spot buys where I could just close my eyes and buy whenever. I got to be very careful because I have liquidation and stop loss points and stuff like that. But these are doing quite well, and I know that's not a great measure for it, but that's important to me because these are really important positions for me that I want to keep. I do not want to get shaken out of. And so, yeah, that's my thesis, guys. I hope that was helpful. I hope that was useful. I don't know if it's right, but it seems right to me. Like, share, and subscribe if you got value. Have a great day. I'll see you tomorrow for a quick update. We don't do, what am I trying to say? We don't do full on analyses. No, I'm trying to speak English here. We don't do live streams on the weekends. I just do quick hits. So I'm going to continue to do those quick hits on the weekends. All right. So I'll see you tomorrow with one of those. All right. Take care. Bye.